Friday, April 23rd, Minnesota Tax Committee is in order. We do have a quorum. Members, I just want to remind us as we get started on our tax omnibus bill. Our mission in the Minnesota Tax Committee is that we will focus on nimble, good fiscal policies that empower Minnesotans and encourage economic growth. You will see that in the bill before you. And as always, we could never do these things without the great support from our staff and from our members. So first, I want to thank our Vice Chair, Senator Miller, and he will be convening a good part of today's meeting. I want to particularly thank Senator Ann Rest, our minority lead. She's been incredibly helpful, a great public servant. I just so appreciate her insight. And of course, all of our members as well. You'll hear from them, Senators Bach, Chamberlain, Coleman, Dietzig, Klein, and a particular shout out to Senator Weber, who was the Property Tax Subcommittee. And of course, his report will be adopted into today's omnibus tax bill as well. And then the people that make all this happen and help us make the best decisions are our staff. And my committee administrator, Brian Steinhoff, thank you so much. Your great institutional knowledge and support has been incredibly helpful. And then my committee legislative assistant, I know that many of you have not been able to meet her, but Maddie Hoy, you are a gem. Unbelievable what you have been able to do, especially in this unusual environment of Zoom. And I do look forward to the time when perhaps next year we'll all be meeting in G15 and you'll get to know Maddie. So thank you, Maddie. And then of course, our researchers, Dan Mickelberg, Republican researcher, Krista Broughton, DFL researcher, just thank you so much for all the information that you are so readily are able to provide, oftentimes at a moment's notice. And our legislative analyst, Bjorn Arneson, so glad that I got to join him over here on the tax committee as we both left that education committee. Our Senate counsel, Nora Pollock, Eric Sylvia, both of you are just brilliant. I thank you for your great support and help as we go forward. And of course, our fiscal analyst, Jay Wilms, I know he's gotten quite a workout as so many of the things we do are tied to those fiscal numbers. So thank you so much. And with that, members, I'm ready to move the gavel here over to Senator Miller, who is going to convene our meeting for much of the day, for much of the morning. Senator Miller.
All right. Thank you, Madam Chair. Good morning, everyone. Just to set some expectations very quickly, Senator Nelson, will turn it over to her to make a motion. Right now, Senate File 961 is on the table, so we will do that motion, and then she'll go through the bill as it is, and we'll take an opportunity to hear from members and offer amendments. Once the member offers the amendment, council will email those out to all the members, so we'll make sure that everyone has an opportunity to review the amendment. We'll have discussion on those amendments, and then we'll take a vote. And then we will go into testimony, and we have a fairly lengthy list of testifiers. So I just ask the testifiers to be as brief as you can. I don't know if staff has given you a time allotment, but if we can keep those comments within 2 to 3 minutes, I think that would be really helpful and get make your point as quickly as possible. So with that said, Senator Nelson, I will turn it over to you for your motion.
Thank you, Mr. Chair. I do move that we take a Senate File 961 as amended off the table.
On that motion, if members could put their video screen on and unmute themselves. So on the Nelson motion to take Senate File 961 from the table, all those in favor say aye.
Aye.
Opposed say no. The motion prevails. Senator Nelson.
Thank you, Mr. Chair. That was the A1DE that we laid on the table yesterday. Today, I have the A4 amendment. It is a bit of a cleanup amendment, and with one element, line 1.25 removes the SFIA proposal that we had put on yesterday. And there was some new information that came to light on that. We'll continue to work on it. Things are just not quite ripe yet. And so at this time, we're just removing that provision that was added in yesterday. And then, Mr. Chair, I'd like to turn over to Council, Ms. Pollock, to talk about the rest of the cleanup language in the A4.
Sure. Ms. Pollock.
Mr. Chair, members, yes, the A4 amendment is some cleanup and corrective language to the A1 that we went through yesterday. And I'll just briefly go through a few lines of the A4 amendment. So starting on line 3, 1.3, that corrects a cross-reference. On 1.4 to 1.13, this adds a section to extend the sunset for the Angel credit by a year. This section was inadvertently left out yesterday as we are extending the Angel credit for 1 year in the text of the A1 amendment. Beginning on 1.14 to 1.18, these correct references in the historic structure rehabilitation credit from the Commissioner of Revenue to the Office of Historic Preservation. It also corrects the allocation amount for the credit. Line 1.19 and 1.20 of the amendment remove unnecessary language. 1.21 to 1.24 correct and clarify some terminology. 1.25, as Chair Nelson mentioned, is the SFIA provision, removing that. And then 1.26 throughout the rest of the A4 amendment inserts the City of Floodwood local sales tax, which was inadvertently omitted in the delete everything amendment. Mr. Chair, and that is it for the A4.
Discussion on the A4 amendment. Senator Rest.
Thank you, Mr. Chairman. How are we to get these? Did you say you were emailing them? I don't see the amendment emailed to me. Where am I supposed to pick it up?
Senator Rest?
Senator Nelson.
Yes, Senator Rest, the amendments will be emailed to you, but a quicker way to get them is on the calendar of the day. The Senate page, you go to the calendar of the day, and so you go to April 23rd, you see the tax committee right at the top, and those will be posted there. All the amendments, all of the letters, everything that you would normally get if you were in G15.
Perhaps Ms. Hoy could email the link to all the committee members.
Yes, Ms. Hoy will email the link for that calendar of the day to everyone. And also it is on the committee listserv. So you'll be getting an email directly.
And it's in our inbox as well. It just came in. So I will, Senator Rest, I will make sure that we give adequate time for members to review the amendments before we take the vote.
Thank you, Mr. Chairman.
Senator Dziedzic.
Hi, so I answered one of my own questions here as I'm reading through them. But are the changes on the to the housing tax credit? Hold on.
Do you have a specific line, Senator Dziedzic?
No, I'm looking at them, so I think I answered my own questions. Thank you.
Okay. Any other discussion?
Yes.
Looks like I froze. Okay, I'm back. Senator Rest.
Thank you. So the two things, the addition of the floodwood provision, would you explain that again?
Ms. Pollock?
Sure. Mr. Chair, Senator Rest, would you like an explanation of what the language does, or?
Why it's coming now?
Oh,
Mr. Chairman?
Mr. Chair, Senator Rest is because I forgot to include it in the A1
I
amendment.
see.
It was not in the
Okay,
group
okay.
of bills that we heard that day with the local sales taxes, so that was my mistake.
Well, I'm,
Senator Rest.
no harm. And then you mentioned the SFIA provision, and where is that language that references those lines?
Ms.
Where's
Powell?
that?
Mr. Chair, Senator Rest, that's on 1.25 of the amendment.
And it is simply, and then this is a question for Senator Nelson.
Senator Rest.
You are deleting that. Is there a policy behind that you're recommending that it be removed?
Senator Nelson.
Thank you, Mr. Chair. Senator Rest, in our DE1 yesterday, we adopted some language regarding the Sustainable Forest Initiative, which had to do with the BWCA and the land around that, kind of that land swap for
Yeah.
the full trust land, something that I know has been in the works way since I was a House member, so it's been 20 years. And it looked like it looked like everything was ready to go with that. However, so we adopted that provision in the DE1 yesterday. As we found out later, there was a little bit, some new information regarding some ownership things, so it just wasn't ripe. We just had to take it out because of the new information, and we will continue to work on the issue. And it's a Senator Bach provision, and he's welcome to address more to that if you'd like.
Mr. Chairman, I just wanted to understand. It's coming out now. May we see it return with a more thorough or complete, or whatever you want to call it, accurate provision? And if this is Senator Box, then I would ask him, Mr. Chairman, if he would verify that. Thank you.
Senator Bach.
Well, Mr. Chairman, Senator Rest, there's some confusion. The land was enrolled in the SFIA program, so the new owner, the Conservation Fund, which is a holding company, was receiving SFIA payments. Department of Revenue scored it at about $400,000. I don't believe we've ever allowed anybody to take land out and not pay back what they had received in payments. And so there's some question. Apparently there's a provision somewhere in law that if MnDOT encroaches on some SFIA property, it can be taken out without a penalty, but there's not such a thing for DNR. So we're just trying to figure it out between DNR. Why is MnDOT being treated differently than DNR is? Because if this transfer to this property is going to MnDOT, it wouldn't be a question about removing the SFIA and the forgiving the penalty for repayment. But apparently at DNR there is. So revenue scored it at a cost, which we didn't believe there was going to be. So we'll try to sort that out in the conference.
Thank you very much, Senator Box, Senator Nelson. Mr. Chairman, there are no other questions.
All right, members, we're on the A4 amendment. Are there any other questions? Seeing none, please put your screens on, and we'll take the vote. All those in favor of the A4 amendment, say aye.
Aye.
Opposed, say no. Motion prevails. The amendment is adopted. Senator Nelson.
Thank you, Mr. Chair and members. So the first thing you might want to know as tax committee members is the omnibus tax bill does meet the Senate budget target. It has a fiscal impact of $533.7 million in fiscal years 22-23 and $180.4 million in fiscal years 24-25. Of that total, $681.8 million reflects tax relief that reduces revenue, and $52.3 million is for credits and property tax aids and credits spending. Members, you might recall that on March 11th, we put on the Senate floor a early conformity tax bill. That was Senate File 263. Senator Bach is the chief on that. Senator Rest and I are also co-sponsors on that bill. Our intention was to get that immediate relief out the door so Minnesotans had some assurances when they paid their taxes. Normally in April, now it's been pushed back to May 17th. They would have some assurances on how those PPP loans would be treated. As you know, the Senate passed Senate File 263. It includes several provisions, certainly the full PPP conformity, both for expenses and deductions. It also includes an unemployment tax exemption for those pandemic unemployment benefits. That was an amendment that I added on the floor. It was about an 18% reduction, and it has some caps on that. Senator Rest worked very diligently on that as well. And that bill also had some Section 179 cleanup language. We passed that in our previous tax bill, something that actually was one of my first tax bills over a decade ago. It's taken a long time to get that done. But of course, there was a little cleanup language regarding some carryover regarding that. So we fixed that. That's in the Bach 263 bill as well. And that, unfortunately, while we thought it would be early tax conformity, the House failed to take it up. And so those provisions are included in the tax omnibus bill before you. In addition, we talked about the tax subtraction equal to 18% of those federal pandemic unemployment benefits. It establishes the housing tax credit. It extends the historic structure rehabilitation credit. That's a Senator Miller proposal. The affordable housing tax credit is my proposal. It provides a temporary sales tax exemption to our restaurants for the materials, supplies, and equipment used to adopt to the changing health guidelines for our restaurants during this COVID pandemic. The bill creates a non-refundable ethanol tax credit. That is a Weber provision, and you will note that it is non-refundable. It does extend the angel investor tax credit for 1 year. It also indexes the K-12 credit and subtraction to inflation. That is a Senator Rest proposal. I forgot to mention that angel was my proposal. Also, I forgot to mention in that Senator Bach's proposal, now part of the omnibus Senate File 263, there is the SALT cap parity provision, which allows those pass-through entities to opt in as a C option corporation in regards to the SALT tax provision. The bill also includes Senator Bingham's Bill 20064, which provides a temporary credit for qualified brewers and retailers. That is for the liquor spoilage due to those COVID restrictions. Senator Howe's bill, it includes a subtraction for volunteer drivers for those reimbursements that they have been paid that are over 14 cents a mile and under the federal mileage tax reimbursement rate. It also includes My Bill 2169, which adjusts the partnership audit reporting requirements, and this aligns with those federal requirements as well. And then with that, members, I'd like to have Mr. Chair, if you could recognize Senator Weber, our property tax subcommittee chair. I'd like him to speak to the property tax provisions in the bill.
Senator Weber.
Thank you, Mr. Chair. Yes, briefly, there was a very thorough discussion yesterday, but the main provisions of the property tax subcommittee report include a reduction in the statewide property tax levy of 28.3 million, 26 million to commercial industrial property, and 2 million to seasonal recreational. The bulk of that is used through the raising of the exclusion from $100,000 to $150,000. And enough money is put into that to ensure that there's no shifting of taxes. Other items include establishing an in-home childcare provider property tax credit of 50%. Again, it's financed by the state in order to not have any shifting. Other items include the veterans' disability income to be excluded from the property tax refund calculation, reduces the class rate on low-income rental 4D property. There are some reporting provisions included in there as well, and gives communities local control over future development. Modifies the agricultural relative homestead definitions, provides a one-time supplemental LGA distribution to those communities who are seeing reduced LGA and to help them through the pandemic. Other provisions include a policy change allowing in general the local communities to establish fire and/or emergency medical special taxing districts. There are some reporting requirements there to ensure that they are passing those savings on in their general tax levy to the residents. And it gives cities the authority to establish an energy improvement special assessment district, a Senator Sinjum bill. Requires an affordable housing development tax assistance report to see what kind of property development or of low-income housing has been accomplished through that has been paid in whole or part by tax increment and or housing trust funds. Then, of course, there are a number of TIF proposals. Before I conclude my remarks, I wish to echo Chair Nelson's thanks of our staff and our nonpartisan staff. They're all tremendous to work with. Our committee administrator, Mr. Steinhoff, and my legislative assistant, Lamont Paikanen. And I also want to thank Senator Rest, who took time to sit with the staff and I as we went through all the TIF proposals and to share her experience and expertise on those particular issues. And I think the TIF proposals are listed, within the report. The main thing that we did not allow was the use of excess increments to go to housing trust funds due to the amount of, let's say, non-development expenses that are paid for out of housing trust funds. With that, Madam Chair, I would turn it back to you.
All right, members, thank you, Senators Nelson and Weber, and
Just a couple more things, Ms.
Senator Nelson.
Thank you, Chair Miller. Just a couple more things to speak to on the bill here beyond those property tax provisions. The bill also allows a sales tax exemption on construction materials for local public safety facilities. There were many requests for those sales tax exemptions. This is very much for the local public safety facility projects. The bill also restores the sales tax exemption for certain K-12 funding activities. And that was a result of some legislation in 2019 that the governor requested, thinking there was some GASB conformity needed, which actually ended up charging some taxation on our K-12 funding activities, which this Senator Chamberlain bill corrects. And then Senator Bach has a educator expense deduction that is in that conformity bill, that early action conformity bill 263, and that is also brought into this omnibus bill. And then we establish Department of Revenue private letter ruling. We spoke about that yesterday. That's a provision of mine. And then, of course, the provisions for the public financing bill that help keep our public financing language in a way that allows our municipalities to continue to provide bonds according to the needed requirements. And then, of course, there are the local option sales tax proposals. Those were all included in the bill, provided that they met the requirements of local option sales taxes. Now with state legislative approval, following the change in the tax law in 2019, the sequence is they start at the state and then they go to their communities for that referendum and vote by voters. And with that, members, that is the ingredients on this bill, and you will see that it delivers tax relief and reform without raising taxes. And I do want you to compare this to the governor's and the House proposals, which increase about $1 billion to support their other proposals, either their tax relief or their spending proposals. They incorporate $1 billion of new taxes. I think I would find that very damaging in our environment, particularly when we have over $1 billion surplus and we have billions coming from the feds. And of course, Minnesotans are still reeling as we recover from not just the health impacts of the COVID-19 pandemic, but those following economic impacts as well. The governor includes a 5th tier income tax, and the House proposes, not to be outdone, the governor's was a 10.85% 5th tier income tax. Not to be outdone, the House has proposed an 11.15% 5th tier income tax. We prioritize our tax response to COVID. As I said, much of the bill includes those conformity items that were in our early action conformity bill that I believe you all voted for. We had a strong vote off the floor. I believe it was 55-12 in favor of that. And you all had parts of that. It also includes this bipartisan compromise on unemployment, a tax relief that we mentioned. As you saw, it lowers the statewide property tax to reduce the harmful double effect of property tax on top of job creators struggling as they come out of these COVID shutdowns. And it supports our Minnesota industries that are working to emerge, obviously, from the pandemic. That includes our high tech, restaurants, brewers, our ethanol retailers. And then, of course, we target other critical needs. That includes tax relief to support affordable housing, addresses the ongoing crisis of adequate daycare throughout our state. And then the remaining provisions also include tax relief and reform for our veterans, homesteads, and communities seeking to construct public facilities. So with that, members, I know you have a good understanding of the bill, and I'll turn it back over to the chair.
All right. Thank you, Madam Chair. We do indeed have a very good understanding of the bill. I do have a few members that have reached out to me in advance that shared that they have amendments, so I'm going to work off that list. I do see Senator Rest has her hand up. Senator Rest, do you have a question before we get to amendments?
Yes, and just a general comment. We certainly appreciate the many of the provisions that are in this bill. And just like some of the other budget bills that we've seen on the floor, for some of them, it's not what's in it, it's what's been left out. And so you'll be seeing in our discussion of it, if not today on the floor, a different set of priorities that would be represented in our amendments. But today I just want to make one comment about the educator expense item, and that was an amendment to the Senator Box Bill 263 that was offered by Senator Eric Putnam. I do want to let you know that with regard, and I have visited with the chair of both property tax and Senator Nelson about the 4D provisions. I'm looking at and trying to work through an amendment that might provide some relief with a transitional aid proposal. It's not ready today for cities that would have what we might say is an unacceptable burden shift with the reduction in the rate on 4D to 0.25, and under the proposal that I'm considering and I'm working on with Senate analysts, we're looking at a proposal that would kind of hold harmless, at least for a year or so, any kind of burden shift there. And it would approximately 43 cities across the state, and be looking at any city that had a net tax capacity that included more than 2% or more of their net tax capacity is in 4D. So we'll be continuing to work on that and make it as efficient as possible. And then we appreciate the sales tax on construction of public safety facilities in various cities. And I know we've had individual bills, and I wonder if it's possible to identify those cities and provide our members, not just on the tax committee, but members on the Senate, those cities that would be affected by their constructing new public safety facilities. So if that information is available, that would be much appreciated to get that list, Mr. Chairman and Senator Nelson. Thank you very much.
Thank you, Senator Rest. Look forward to those ongoing discussions. The First Amendment, we will go to
Senator Miller.
Senator Nelson.
Excuse me, before I get to the amendments, I need to offer an oral amendment that I forgot, which is on our one, and I'll let Ms. Council describe it. Page 131, delete section 5. So Ms. Pollack, if you could address that for members, please, I would greatly appreciate that.
Okay, Ms. Pollack.
Mr. Chair and members, yes, the oral amendment is on page 131 to delete section 5. This is a provision from the Department of Revenue's background check requirements for vendors and other contractors. And this is a purpose statement that was included in the bill. And it kind of makes sense there as a standalone, but not as much here as part of an omnibus bill. I have discussed this with the department and they are fine with this amendment.
Okay, members, Senator Nelson moves the oral amendment as described by Ms. Pollack. Is there any discussion on the oral amendment? Seeing none, all those in favor say aye.
Aye.
Opposed, say no. The motion prevails and the amendment is adopted. Senator Nelson, anything further before we go to member amendments?
No, Mr. Chair, I look forward to those amendments.
Okay, the first person I have on my list is Senator Bach.
Well, thank you, Mr. Chairman. I actually have 3 different amendments. I don't know, looking at which one I should take first. I guess maybe the one I'm offering on behalf of Senator Tomassoni, the A6 amendment, Mr. Chairman.
Okay, members, Senator Bach moves the A6 amendment. Senator Bach, you can start describing that. And again, members, we will make sure that everyone has the opportunity to review that amendment before we vote on it. It's already in my email, so it's moving pretty quick. Thank you, Mr. Sylvia. To the amendment, Senator Bach.
Well, Mr. Chairman, back in 2008, the IRRB board was struggling with the commissioner. So we did a number of appropriations rather than doing them at the board level. We actually did them in law. One of them was one that Representative Rukavina wanted a county road improved. So we appropriated $2 million of taconite money back in 2008 to fix up a road around the city of Biwabik. I don't know the county road number, but the name of the road is the Whiskey Road. It was $2 million. Turns out the county didn't want to improve the road. So they have never done the work. And Senator Tomassoni got a call from the county administrator here during the session. And he said, you know, we're carrying this $2 million on our books and we're not going to do that road. So why don't you move it to some other purpose? So because it was really intended to benefit the city of Biwabik, Senator Tomassoni thought we really should give them the opportunity to repurpose the money to another project. So what the amendment does is it takes 1.5 million of the 2 million of taconite money that was appropriated in 08 and moves it to the city of Biwabik rather than the county, and allows them to use it on their city streets. Their main one is their main street, I believe. They're going to do a reconstruction of the main street. and it's a state highway, but there's a local share. And then, but it doesn't take the entire 2 million. It leaves 500,000. The county does want to hold on to $500,000 to make some improvements to County Road 138, which runs from Giants Ridge north. It's a county gravel road. And Biwabik is the closest city there too. So they actually end up benefiting from that county work also. Mr. Chairman, that's the extent of the amendment. There's no new money. We're just repurposing some money that was appropriated years ago.
Discussion on the A6 amendment. Senator Rest.
Thank you, Mr. Chairman. I don't believe I have any particular objection to the amendment other than for you new members of the tax committee, welcome to the Iron Range. Senator Bach is laughing. Amendments to the tax bill that benefit or affect the Iron Range in northern Minnesota never come to the tax committee in the form of a bill. They only come to the tax committee when the bill is marked up. There's no testimony. Thank you. A very complete explanation from from Senator Bach. And I'm not going to oppose this, but in the future, I think we need to be just a little bit more particular about adopting amendments like this, where the member has not introduced a bill, it's not been heard, and it's not been discussed. So I'm going to support it, Senator Bach, but you know, after 20 years, you think you guys could get your lives in order and get bills introduced so that they can be discussed. My good friend, Senator Bach.
Well,
Senator Rest, sometimes things just never change. Senator Bach.
well, Madam Chair, it's interesting that all of the IRRB statutes are in the tax chapter, even though it's an economic development authority. And that happened because Senator Johnson was the longtime chair of the tax committee, and he wanted to have things in his jurisdiction. So, Senator Rest, you're right. We do a lot of things by amendments. They're little. They only affect the Iron Range. They don't affect anybody else. But in this case, in full defense of it, Senator Tomassoni just got the call from the county administrator saying that, get this off our books. We're tired of carrying it. And so, it's just came. This one came late.
Further discussion on the A6. Senator Nelson.
Yeah, thank you, Senator Miller. I was trying to find that digital hand there. Yes, well, first let me say, as chair of the tax committee, I like to have all these things in the tax jurisdiction too. So I understand Senator Johnson's view on that. But what I would say is it is always helpful to have things go through the legislative process and through hearings when at all possible. And Senator Rest, I do appreciate that sentiment and agree with it. And I also am also appreciative that both Senators Bach and Senator Tomassoni did speak to me about this yesterday or the day before. That gave me a little bit of time to do my homework. And what I was able to ascertain was that the county commissioner is indeed speaking on behalf of his fellow Iron Ranger commissioners or IRRB commissioners in favor of this proposal. And I did also speak with Senator Newman, our transportation chair, who was aware. So we were able to do a bit of work on this in the short amount of time we were given, but it is true that bills, we do like to get them sooner if possible. And also, though, I do want to thank the Iron Range senators for alerting me to this amendment, and we were able to get a little background on that. And with that, of course, I would accept this as a friendly amendment today.
All right, members, we're on the A6 Bach amendment. Any further discussion? Seeing none, all those in favor say aye.
Aye.
Opposed, say no. Motion prevails. The amendment is adopted. Senator Bach.
Well, Mr. Chairman, I've got the A7 amendment.
Senator Bach moves the A7 amendment. Again, Senator Bach, please start describing the amendment as it's distributed to members electronically.
Well, Mr. Chairman, the A7 was in a bill and it was heard in the Finance Committee. I have a bill that I guess some of you are authors on, but Senator Rosen and I are the first and second author, that is going to that's going to refinance the Viking Stadium bonds
Need to see that.
when they're callable in 2023. The state will, that bill was heard in finance, ended up being incorporated into Senator Kiffmeyer's state government finance bill. But there's a provision in that stadium refinance bill, and everybody thinks it's a good idea because it's going to save us about $400 million of debt service on the Viking Stadium, and actually end up paying the bonds on the stadium off 10 years early. But Senator Rosen and I came to the conclusion when we heard the bill, there was a repealer in the bill that really belongs in the tax committee, not in the state government bill. And that's what the A7 amendment is. What the A7 amendment is when we did the Viking Stadium and we authorized electronic pull tabs, and I just remind everybody, the only reason electronic pull tabs were done was to provide debt service for the Viking Stadium. And the surplus, the electronic pull tabs are bringing in far more money than we need for the debt service. So that's being held in a reserve account by MMB. By 2023, there's going to be about $200 million of excess money that those pull tabs have generated that will help us buy down the bond sale. And that's where the savings comes from. Well, when we did the electronic pull tabs, we knew they were going to be new. We thought, gosh, what if they don't bring in enough money? We need a backup revenue stream. So we put two different backup revenue streams in place. One was that if we were short enough money to pay the debt service on the bonds, we would take $20 million of the corporate income tax that's collected and move it over to the stadium account to pay the bonds. We did that the first couple of years because it took a little while for the electronic pull tabs to catch on. And the other backup revenue stream that we've never used and will never use is there was a provision put into the stadium bill that said if there was a shortfall in revenue, that the state could impose a suite tax on the suites that the Vikings sell for the stadium. That's never happened, won't happen. So what the amendment does, it's a conditional repealer that once the bonds are refinanced, and that they're callable in 23, once they're refinanced, these two conditional revenue streams will be repealed. There'll just be no need to have them. So I'm just trying to clean up a few things. I thought it would be better if it was in this bill than over in the state government finance bill.
All right, members, discussion on the A7 amendment. Senator Rest.
Thank you. Thank you, Mr. Chairman. Senator Bach, would this reference open up additional policy amendments dealing with the stadium bonds? And I mean, I know you're not you wouldn't be the person ruling on that, but I just wonder, you don't expect any other changes, and your bill that I'm also on with you and Senator Rosen and others. What's the status of that bill right now? Would you just review that?
That bill, Madam Chair, was heard in finance and was amended onto Senator Kiffmeyer's state government finance bill. That's where it's being carried.
Senator Rest.
And thank you, Mr. Chairman. And so there would be no need to put it in both places. I'm just trying to see, by putting this conditional repealer here, does this open up discussion of the stadium bonds and policy regarding them in the tax bill? Or is that absolutely not I don't mean to, it's not proper for me to talk about your intent, but I'm just trying to ascertain what the effect would be.
Well, I don't, I mean, I have no thoughts of anything other than what's actually on the sheet of paper. And, and
Well, I'm just asking, you know?
yeah, well, and I just thought it was better to carry it here than in the state government bill because it is a tax provision. And it doesn't raise or increase taxes, but it's still in the tax statutes. I thought just for jurisdiction purposes, this would be a better place to carry it.
Okay, I will support your amendment, Senator Bach.
We'll go to Senator Dietzich and then Senator Nelson. Senator Dietzich.
Thank you, Mr. Chair. Senator Bach, do you know, so I drive by the stadium where I can actually just walk outside and pretty much look. And there's a lot of work and there's been a lot of damage on the outside and continually replacing the outside of the stadium since pretty much it's been built. And so do you know how that is paid for? And I know this is related to the bonds and down payment of the bonds and paying back the bonds, but how is that maintenance being repaired? Because since there's been continual maintenance, I don't know. I know originally it was probably under warranty. I don't know if it continues to be under warranty. And I don't know if this says bonds, but you know, we own that. And so how are we going to pay for the maintenance if there's continual maintenance problems like there has been? And I don't know if this is, you know, could be switched to that because it doesn't say it's for maintenance, but I just get a little nervous on how much are we going to be paying for maintenance and at what point and how do we pay for that? And, you know, is this an option that we could negotiate with the tenants at some point in the future? It may or may not be related. I just see nonstop work ever since that has been built. You go by after one of the strong wind storms this winter, like the whole thing that used to be blue is now gray. They were just blowing right off. So I just have concerns.
Well, Mr. Chairman, Senator Dietzich, the electronic, a portion of the electronic pull tab revenue that comes in is for security and maintenance on the Viking Stadium. And that'll continue on permanently even after the bonds are paid off. There's a revenue stream for all of the public safety, the policing, you know, the heating and everything of the stadium, the maintenance of it. It's about, the total is about $42 million a year of the electronic pull tab money. And that will continue permanently going forward. That's where the revenue stream will come from to make sure that the stadium is maintained and adequate public safety around it.
Senator Nelson. Senator Nelson, you're on mute.
Thank you, Mr. Chair and members. And we all look forward to the refinancing those bonds, and we look forward to saving the state money there. And while I appreciate the tax jurisdiction, at this point, I would respectfully ask that actually this provision stay in the state finance bill with the rest of those provisions. And then also, if need be, we can definitely look at this at a later time. But right now, I am just a bit cautious about amending it on to the omnibus tax bill without having been part of those finance hearings, without face-to-face conversation with Senator Rosen. I want to thank Senator Bach for bringing this to my attention yesterday, or last evening. But there are still some lingering questions, and it's not of a timely nature. And so, for the moment, I would suggest that the language stay where in the committee where it had that hearing, and we can certainly reconsider at another time if we need to put it into the tax bill. But for today, I just don't believe that would be the decision that I could support.
So, Madam Chair, are you suggesting that I offer this amendment on the floor to the state government finance bill to keep it all in the same place? I mean, if you're fine with, maybe I should have talked to you before we heard it in finance. We certainly could have left it in the bill in state government finance. I just was trying to be respectful of committee jurisdiction, but I'm fine with amending it on the floor. I don't believe there's any objection to it. Not in the finance committee, at least among those members, because we had a hearing on it. If you're fine with waiting till the floor to do it with state government finance, that's fine with me.
Ms.
Senator Nelson?
Senator Bach, I greatly appreciate the looking out for the jurisdiction of the tax committee. I do believe that's important, and I really appreciate you being a watchdog for that. I'm just, I understood that it was in the finance bill. Did you say, or the state gov bill, has it been stricken? Has this provision been stricken from the provisions that were adopted in finance?
Well, when the bill was originally introduced, it went to finance. When we had the hearing on the bill in finance, this was part of the larger bill to refinance the bonds. I felt that because this was a tax provision, we should take it out and move it over to the tax committee. It was in the original bill, it was heard in finance, we could have just left it in there. I just did it, I thought, Madam Chair, as a courtesy to you, that it's a tax provision and it probably should be in the tax bill. But if you're okay with it carrying it in a state government finance bill, I mean, I'll talk with Senator Rosen and Kiffmeyer about that and offer the amendment on the floor if you think that's works better for you.
Mr. Chair?
Senator Nelson, I have just a quick suggestion. I would actually suggest that we just adopt it and have further discussions. I did talk to the finance chair both last night and this morning about this, and she seemed to be fine with it, especially since it did have some discussion in that committee. But since it's not currently in the state gov bill, I think this bill is a better fit for it. But those are just my thoughts. Senator Nelson.
Hi, Mr. Chair. Well, I agree with both of those things. I thought it was in the state gov bill. That was kind of the point I was trying to get at. But if it's not in the state gov bill, and we still have some time to discuss this before we get to the floor. And I've had some conversations also with the finance chair as well, and with Senator Bach. I believe I do appreciate maintaining the jurisdiction of the tax committee, Senator Bach. I think that is a wise thing to do, and really appreciate your insight on that. And so I'll go ahead and I guess second your move for adoption, support that at this point. But I think what we see is it's difficult for a committee to act on something that hasn't gone through that committee process. And of course, we're just extra careful when it comes to something as large and as impactful and big as that stadium. But with that discussion and knowing that we could have some further discussion before the bill comes to the Senate floor, I do not have a problem adopting the provision today.
Well, Madam Chair, I'll just be clear. It's not in Senator Kiffmeyer's bill. It would have been. It would have been, but I'm the one that made the decision because it looked like a tax provision to me that maybe we shouldn't offer it to Senator Kiffmeyer's bill and it would be better carried here. But maybe I should have just asked you about it and left it in her bill. Wouldn't have wasted all this time, I guess.
All right, members. I think we all have an understanding of where it's at. Is there any further discussion on the A7 amendment? Seeing none, all those in favor of the A7 say aye.
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 Opposed, say no. The motion prevails and the amendment is adopted. Senator Bach, do you have one more?
I have one more, Mr. Chairman. The A3. This is another IRRB one. And this was the one that
this will make Senator Rest even more excited. Senator Bach moves the A3 amendment. We'll make sure that gets distributed. As it's getting distributed, please describe the amendment.
Well, she won't be surprised, Madam Chair, Mr. Chairman. Back in 2014, we established a fund at the IRRB in the tax bill and moved some different taconite tax money around. We created a new account called the School Consolidation and Collaboration Account. And the IRRB board, with the approval of the commissioner, appropriates money for school projects where schools are collaborating or consolidating. We've built a number of new schools. Let's see, 1, 2, 3, 4 right now, where the IRRB has participated in a pretty significant way through this account to help buy down the debt service for the school district. Because you have to, and the reason is you have to remember, taconite companies don't pay property taxes. So this is a way that these large commercial properties, by using some of their taconite money, can essentially be put on the tax rolls and pay for part of the bonds. So anyway, there's been such tremendous interest in it. We've got one, maybe two other projects that want to do construction. And we really are going to run short of money to be able to finish up the work that needs to be done. So when we did the language back in 2014, there were some taconite bonds for school construction that had been issued years ago. Senator Rest knows this because we've been doing them a long, long time, where we help buy down debt service. We thought that when those bonds start to blink off, we wouldn't need this 5 cents. And as it turns out, those bonds are blinking off, but there's more interest in the account in the school construction than we thought. So I had put actually, Senator Skoye was the author, a sunset on the nickel that went to the counties because I didn't think we'd need it any longer. Turns out there's more interest. So this is the provision that Senator Nelson mentioned. The chair of the county commissioner, the finance and budget chair of the county board. I contacted him about him, asking him how he felt about the IRRB keeping this nickel and taking the sunset off. He said he was fine. He said he had talked to his other range county commissioners. They were fine. He put that in a text this morning that I shared with Senator Nelson. So that's really it. It's just it moves a nickel around of the taconite money rather than going to the county, would go to the IRRB. For school debt service, school bond debt service.
Discussion on the A3 amendment. Mr. Sylvia, did you have anything to add?
Mr. Chair, members, nothing to add specifically. As Senator Bach indicated, it is removing the 5 cent allocation to the counties, which would begin in distributions in 2024 and would redirect that 5 cents beginning in 2024 to the Taconite Economic Protection Fund. There's no general fund impact. It's strictly production tax dollars.
Discussion on the A3, Senator Nelson.
Yes, thank you, Mr. Chair. I appreciate Senator Bach bringing this amendment to me last night as well, and did get that confirmation from the IRRB commissioners. And also, Mr. Sylvia was able to give me a little bit of background on how that's being used. And I would share this with the committee. We couldn't find a full accounting in this short amount of time on disbursements from the account, but we were able to see that recent disbursements from the school consolidation account have been to fund cooperative educational programs in Northeast Minnesota, and a substantial annual debt service payment, as Senator Bach said, to fund those capital expenditures of the consolidated Evelyn, Gilbert, and Virginia school districts. And we know how difficult those, these are my words now, we know how difficult those consolidations are, and yet sometimes necessary. And I believe this sounds like a good use of those funds. We know that's difficult. We know that accommodations need to be made. And I appreciate the fact that there has been help in making those type of consolidation acknowledgements and accommodations that need to be made. So Senator Bach, I will be supporting your amendment.
Well, Mr. Chairman and committee members, just so everybody kind of understands, the range really is different because our big businesses, our heavy industry don't pay property taxes. So when a school tries to go out on a bond issue, it largely falls only on the single family homeowners and the small businesses on the main street. The big businesses, you know, they're worth billions of dollars, don't pay on a school referendum. So this is how we're able to buy down some of the costs for homeowners and small businesses through using some of the taconite production tax money that they do pay.
More
It's intended to be in lieu of property taxes.
Senator Rest.
Thank you, Mr. Chairman. I will support this as well. A bit concerned that it's doubling the amount. And with regard to the uniqueness of the taconite area, fiscal disparities in the program, Metropolitan Tax Base Sharing Program in the metropolitan area, even though the Iron Range has one, it is certainly unique to us, and yet we we do often get criticisms from legislators who have no connection with it at all and do not follow our lead in the metropolitan area with how we want to deal with a unique program for us. So just pointing that out. There are unique areas and unique tax policy that affects more than just the taconite area, but helping the schools out, and certainly in the description that Senator Bach made about who has to otherwise pay for school bonds, that's a big deal, and I believe this is a good amendment.
All right, members, Senator Bach moves the A3 amendment. All those in favor say aye.
Aye.
Opposed, say no.
Aye.
The motion prevails and the amendment is adopted. Senator Bach, any more amendments from you?
No, I'd love to, Mr. Chairman, but not today. And I don't have any plan for the floor either. Not today, at least.
Well, you just made Senator Rest's day.
I'm happy.
Senator Weber.
Thank you, Mr. Chairman. I believe it's the 8th amendment.
Senator Weber moves the A8 amendment. We'll make sure that that gets distributed electronically as that's happening. Senator Weber to the amendment.
Oh, Senator Weber, you're on mute.
Somehow my space bar isn't working. Okay. Thank you. This amendment, it was kind of bill form, but due to COVID and the lateness with which it came out of the revisor's office, it wasn't able to be dealt with. This is a provision that actually has been in the tax bill for, as I understand, for the last 4 Senate omnibus bills. And it's supported by the Coalition for Affordable Food, a broad coalition of agriculture, business, and labor that includes corn growers, pork producers, Minnesota Beverage Association, sugar beet growers, Minnesota grocers, and Minnesota retailers, as well as the Teamsters. And basically, the amendment clarifies that local governments do not have the authority to tax anything that falls under the statutory definition of food or the packaging that it comes in. Provisions are made, of course, that at the request of the League of Cities, Minnesota Cities, that this language does not apply to reasonable licensing fees. And so with that, this has had broad bipartisan support in the past, and I would move the amendment at this time, Mr. Chairman.
All right, members, discussion on the A8 amendment. Senator Klein.
Thank you, Mr. Chair. And I apologize for not having experience with the previous testimony on this legislation. So I guess I just do have a couple of questions. It would be very helpful to hear testimony both from cities and counties and also advocates on this at some point. And I apologize if I've missed that, if it's been done in the past. I can envision a scenario where a municipality might want to experiment, for example, with a levy on high sucrose or high sugar foods, unhealthy foods, trying to encourage healthy eating habits, et cetera, as a public health measure. I can see how that would be effective at a municipal level as an experimentation prior to passing statewide legislation. And this provision, it seems to me, would prohibit that sort of democratic experimentation. Do you have any thoughts on that?
Senator Weber.
Thank you, Mr. Chairman. At this point, I believe that, there are a number of experiments, I think, that we need to sometimes question as state government. And I believe that right now, one of the things we need to also consider is, the affordability of food. And I think that when we have any of these, at this time, it's my understanding that there really aren't any local taxes that are in place for this type of thing. But I do think we need to be concerned about the affordability of food. That's one of the reasons we've kept food excluded from sales tax and that type of thing. And so, with that being said, Senator Klein, I think this is a reasonable amendment.
I have Senator Dietzig.
Thank you. So we've heard this before. I think it's been a bill in the past, so I don't really, it could have been, I know there was a backlog due to COVID at the beginning of the year getting things introduced, but I believe this was a bill before, so, it shouldn't have been that hard to get it redone. I know when we heard it before, there were a lot of concerns. I think section D, starting on lines 1.18, that it doesn't apply to reasonable fees, I think is helpful, because I think that's one of the city and county concerns. But do you remember, and have you shown this to any of the city or county associations, just to get recent impact to see if they have any other concerns? Because I'm, scrambling to reach them. Do we have any comments from them, and were you able to share it with them?
Senator Weber or?
Mr. Chairman, I have not had any visits with any city or county officials regarding this issue.
Senator Bach, followed by Senator Rest.
Well, Mr. Chairman, this was a bill. It's been carried in the tax bill before. It was a bill this year also. I don't know why it got introduced late. Apparently, I think that one of the advocates told me that they had gotten bottled up in the revisor's office earlier in the session. Remember when we had all the backlogs? I don't know what the bill introduction date was, but I do know there was a bill because I signed on it as one of the co-authors. So I'm not sure why we didn't get it in the queue, maybe in time to get a hearing, and I can't answer that, but there was a bill.
Senator Rest. Senator Rest, you're on mute.
Thank you, Mr. Chairman. At this point, I'm not going to support this. I do know that it's been in the tax bill before, and the lines that are of particular concern for me are lines 116 and 117. This is essentially banning any kind of fee on plastic bags and things like that, and that has been fairly controversial among the cities. And I know some folks and some legislators don't want to allow that at all, but I think this needs more discussion, more work. And even though it's been there in the past, that we needed a fuller hearing in the tax committee. And I respect the fact that a number of bills, even those that we have heard before, just didn't make it quickly through the revisers process this year. No harm, no foul, but I'm going to vote no.
Senator Nelson, any comments?
It's been a good discussion, members. At this point, I'm going to support the amendment. I've not been able to hear from cities or counties either at this point, but I did note that the bill does not exempt impact any kind of licensing for the cities or counties requirements. So I did find that comforting. And so I'll be supporting the amendment at this point as we go forward, and we may learn more later.
Senator Dietzig, another comment? Senator Dietzig, you're on mute.
Sorry, I'm hitting every wrong button. So if you look at line 1.6 of the amendment, it already says no county, city, town, or other taxing authority shall increase a present tax or impose a new tax on sales or income. So can you explain to me why this is specifically needed? Because it already says they can't do that. And again, I'm just concerned without, I remember hearing it before, and I remember there were a lot of questions. I think they were around the licensing issue, and that language is in there, so that's helpful. But without having heard this and without hearing from them specifically if this is okay or what this does, I'm going to be voting no. And I also just don't understand why it's needed when that, line 1.6 and 7 says, no county, city, or town or taxing authority shall increase a present tax or impose a new tax on sales or income. So my understanding, and maybe council can confirm this, I mean, they'd have to come to us to add on a tax. Is that correct?
Is there Ms. Pollock?
Mr. Chair, Senator Dietzick, I can't speak to the specific intent of this bill, but the language on 1.8 and 1.9 speak to excise taxes or fees, which are a little distinct from sales taxes.
Okay, thank you.
Mr. Chairman.
Senator Weber.
It's my understanding also that it's a clarification of food taxes, which Ms. Pollock indicated have somewhat different elements involved, and excise taxes in particular. And so that's my understanding as well.
All right, members, any further discussion on the A8 amendment? Seeing none, all those in favor of the A8 amendment, say aye.
Aye.
Aye. Opposed, say no.
No,
The motion prevails and the amendment is adopted. Members, that's all I have on my list. Are there any other amendments before we go to testimony on the bill?
Yes, Senator Miller.
Senator Chamberlain.
I believe, I don't know if it's the 812 or 813. We had a little confusion about the number of the amendment. Ms. Pollock could clarify that.
Ms. Pollock, can you help us with the number on the Chamberlain amendment?
Mr. Chair and members, yes, it'll be the A12, and I'm sending that just now.
Thank you.
Senator Chamberlain moves the A12 amendment to the amendment as it's getting distributed electronically. Senator Chamberlain.
Thank you, Mr. Chair and members. I did talk to Chair Nelson about this as we work through some other issues. When we had the K-12 bill in tax committee, about a week ago, a little over a week ago, we had after that hearing, the Department of Revenue at some point contacted staff and suggested that for the ESA, the education savings accounts, that those transfers may be taxable, may become taxable income to the transferee, to that family, and be included in Minnesota taxable income. There'll be some debate about that. It may or may not be, but we wanted to make sure that such transfers were not going to be included in Minnesota taxable income. So this amendment clarifies that the transfers to a parent's education savings account of money for their child's education will not become a taxable event in Minnesota. So yesterday, during our long discussion on the floor, we did put a limit on the ESAs on first, the number of students that would be that can do it year over year. And secondly, we put a cap on the income level, the top being about $145,000 based on the free and reduced lunch numbers that we use for children in school. So that's what this amendment is. We have a cap on the income. We didn't want to go into millionaires and billionaires. But we didn't want to have this income tax of those parents who are trying to get their kids educated. So that's the amendment, members.
All right, members, discussion on the A12 amendments. Nelson.
Yes, Senator Chamberlain and I did discuss this in a bit of a different form. And that was, the intention was not to provide tax relief to wealthy parents, but to target this tax relief to lower income parents, meeting a similar threshold to what Senator Rest and I worked on regarding the unemployment insurance subtraction, trying to reach that same level while not providing tax relief to those who could afford those payments anyway. And so I will accept this amendment, this A12, as further targeting resources to those who need them most.
Any further discussion on the A12 amendment? Senator Dietzig.
Is there a cost to this, or how much does this cost? I mean, it should balance out because we're already spending the money in the education budget, but is there any interaction or underlying cost on this?
Mr. Chair?
Senator Chamberlain, and then we'll go to Mr. Wilms. Senator Chamberlain.
Mr. Chair and Senator Dietzig, the understanding is there would not be an additional, there's no cost to it. It's already in the base and there'd be no extra dollars to it. It's nothing, no new dollars.
Mr. Wilms.
Mr. Chair and committee members, with regard to this provision and tracking the bill in general, all of the changes relative to the baseline being the February 21 forecast, since this is a new provision and it's not currently as part of the baseline, there's no net effect to the budget of changing it to be non-taxable before it's enacted. If, for instance, the bill were enacted and then after the next forecast, these taxable accounts or these accounts being part of the baseline, they were to be made a subtraction. At that point, we would score a budget cost. But at this juncture, there would be no cost relative to the baseline.
Senator Nelson, followed by Senator Rest. Senator Nelson.
No, I just forgot to take my hand down. I already made my comments.
Senator Rest.
Well, thank you, Mr. Chairman and Senator Chamberlain. I think the comment made by Mr. Wilms is very instructive that there are ways when we introduce amendments like this or bills, and of course, as you mentioned, Senator Chamberlain, this was discussed yesterday, that actually do have a future impact or effective dates mean a lot. And we really do need to pay attention to them relative to when something gets into becoming a forecasted item and then it not looking like, in a sense, it costs us anything because it just reduces a surplus or increases a deficit. And we know that that has happened before. We have something in this bill about the November forecast. We have 6 items already or 5 items already, and we are adding a 6th one with regard to the, I believe, or I know we've talked about it. I have to go back and look at the accelerated June sales tax payment. And it once it gets in the as a forecasted item, it doesn't look like it costs us anything, but that's one of those things that Senator Bach often talks about as a tax expenditure that is just then assumed when we have a surplus that we don't then re-examine it. So I'm not opposed to this amendment at this point, but we really do need to be self-conscious about the impacts of amendments like this and policies like this, just as the one where we actually do spend the surplus money and with priority order and not do it with our eyes closed. Thank you very much.
All right, members, any further discussion on the A12 amendment? See none. All those in favor of the A12 say aye.
Aye.
Aye. Opposed, say no. Motion prevails and the amendment is adopted. Are there any other amendments? Seeing none, we will go to the testify. Oh, Senator Dietzig.
Thank you, Mr. Chair. I don't have a amendment, but I have a question, so I didn't know when the appropriate time would be to ask the questions.
Go ahead with your question, Senator Dietzick.
So, thank you, Mr. Chair. So on the bill, in the bill, I'm looking for where it's at here. Hold on. Article 9, Section 1, I believe it's line 127. We heard, I believe it was a Senator Abler bill, might be Senate File 544 on the private nonprofit hospital revenue recapture. So part of the issue, I believe, was that, and I know I have a constituent who wrote an op-ed on it and calls me all the time on it, that he is a private business owner and he has to, use a debt collector to collect that, and the state is not collecting his debt. So he has concerns, why do some companies, and he considers them larger companies, why are they able to have their debt collected and done by the state and smaller businesses don't? And so I'm just trying to understand. I know there was a lot of questions on like who all this impacted, and revenue might have had some concerns on how they administer it, but I'm just trying to figure out, I believe the new language says provides that private nonprofit hospitals that are eligible for participation in the revenue recapture program must annually provide the DOR a copy of the hospital's lease agreement. So I'm just trying to figure out how that helps and like what that is supposed to do.
Senator Nelson.
Thank you, Mr. Chair. And Senator Dietzick, I'm glad you brought this forward because this is a bit of a change. So what we found, as you know, we heard the Abler bill, I think it was number 808. I'm just taking the number from the top of my head here, but we heard that Abler bill. And I was concerned as well. I think many were. And so as we dug into that, and I'll have Mr. Wilms continue in a moment, but as we dug into that, we found that the current application that a provider would make does not specify who owns the building, whether it be the city or the county, that gives them this authority to use the state as debt collectors. And as we were trying to ascertain who the bill would apply to, we couldn't, because the application in order to participate in this program did not include the necessary information. And so as a move in the right direction in trying to make better policy, having better information, this language would require that when a private nonprofit hospital wants to participate in the state recapture program, they're going to have to provide to the state their lease. So we know who owns the building and all of those type of things. And that's on an annual basis. And I think, Senator Dietzick, that will help get us to a better understanding what this ability in current law is letting happen, what the cost is and who it's impacting. But right now, we just didn't have enough information to move forward with the legislation in the manner I had intended. But I believe this is a step that will get us there. And I'll let Mr. Wilms continue if I missed anything.
Madam, Mr. Chair and committee members, I think actually Mr. Sylvia might be the appropriate more appropriate person to fill in some of the gaps here or add any other context. I'm certainly happy to speak to some of the fiscal items, but I think Mr. Sylvia is more appropriate for this specific item.
Mr. Sylvia.
Mr. Chair and members, as Senator Nelson indicated, when these private nonprofit hospitals that lease from the city or county in which they are located certifies to the Department of Revenue that they're eligible for the revenue recapture program, there is only that one certification that they are eligible, but the department is not aware or certain whether or not they actually rent from the city or the county. And when we heard this proposal, or Senator Abler's proposal a few weeks ago, I sent a follow-up email with a list of private nonprofit hospitals that do rent from either the city or the county that have used the revenue recapture program and are eligible. But even the department at that point was not able to determine who on that list rented from the city or the county. And so what Senator Nelson indicated is simply a requirement that at that annual certification that these hospitals have to make to the department each year for purposes of this revenue recapture program, that a copy of the lease agreement be provided so that then the Department of Revenue and then the legislature would have that one piece of missing information about who exactly that hospital is renting from.
Let's see, Senator Rest.
Thank you, Mr. Chairman. I want to apologize for not paying closer attention to the Chamberlain amendment. In and of itself, it looks innocuous, but of course it's referring to the education bill inside, and it is in support of what are called education savings account, in which some of us call by the B word, vouchers. I do not support it. I'm not going to ask for reconsideration, but I want to make it clear and publicly that I do not support a voucher-like system, regardless of what PC language is used for. No disrespect to Senator Chamberlain, my own mistake that I wasn't paying attention, but I vigorously oppose it. Thank you. Thank you, Mr. Chairman. This will not keep me from voting for the bill.
Okay, members, any other discussion on the omnibus tax bill before we go to testimony? Okay, again, I will call the testifiers here, and just please try to keep your comments as brief as possible. We do have a fairly lengthy list, and we want to get to all the testifiers today. So the first testifier is Commissioner Dottie from the Department of Revenue. Welcome to the committee. Please state your name for the record and proceed with your testimony.
Thank you, Mr. Chair, members of the committee. Thanks for having me here today. For the record, my name is Robert Doty, Commissioner at the Minnesota Department of Revenue. First, I would like to thank this committee for the work you have done to make difficult decisions to balance the diverse needs of all Minnesotans. I appreciate that the chair has included several of the provisions from the governor's budget, such as the Section 179 carryover fix and extension of the Angel tax credit to support farmers and small businesses, the exclusion of veterans' disability compensation for purposes of calculating property tax refunds, and bringing Minnesota into compliance with Internal Revenue Service requirements for state and local governments that receive federal tax information. Unfortunately, Senate File 961 misses the opportunity to ensure adequate revenue is available to make needed investments for all Minnesotans, both now and as we continue to recover from impacts of COVID-19. I'm here to express concerns about how Senate File 961 will impact Minnesotans. The bill provides very limited income tax relief for low and moderate income Minnesotans. It lacks significant property tax relief. Expanding the working family credit to single adults or those who don't claim dependents, as well as younger adult taxpayers who have fewer supports, would help boost the income of many more Minnesotans, including those in low-wage jobs who are doing essential work during the pandemic. Unfortunately, this bill fails to provide important budget support to families across Minnesota with investments in this important program. As we move forward, we hope to continue to discuss the inclusion of the governor's proposals to increase working family credit amounts and phase-outs and extend the credit to 19 and 20-year-olds. The Homestead and Renters Credit Program has been an important tool to provide property tax relief to about 800,000 Minnesotans to help offset their property taxes. This bill does not include investments to increase credit amounts and thresholds to provide needed relief. Hundreds of thousands of Minnesotans experienced job loss as a result of the COVID-19 pandemic and relied on unemployment insurance this last year. While we appreciate the committee's provision to allow a limited subtraction for unemployment insurance benefits received by workers in 2020, we strongly encourage the subtraction to match the governor's substantial investment of almost $260 million. We are concerned by the lack of conformity to the many federal changes that have been enacted since December 31, 2018. Failing to update our tax structures increases complexity of tax filing and long-term record keeping for individuals and businesses. It also fails to adopt the many changes that would provide additional tax relief. The primary conformity item included in Senate File 961 is full conformity with the Federal Paycheck Protection Program. The governor's approach to this program is more targeted and fiscally responsible. The governor's budget excludes the first $350,000 of forgiven loans and focuses relief on the small businesses who received this important lifeline. Approximately 90% of the loans received in Minnesota are in amounts of less than $350,000, and therefore the entire amount would be excluded. The amended bill includes a requirement for the department to administer a private letter ruling program. As the department testified several weeks ago when the PLR bill was before the committee, this program provides specialized and costly guidance only for those who can afford it. Minnesota already has many ways to provide guidance to taxpayers, including through published revenue notices that can provide guidance on complex questions that can be relied on by everyone and anyone, regardless of ability to pay. In the interest of time, I was not able to address all our concerns or the provisions of the governor's tax bill that are missing from this bill. I would like to note that the department's policy and technical bill provisions are not included in this bill, and we hope you will consider them as we head into conference committee. As we analyze your bill in more detail, we will continue to communicate with you. The department would like to reaffirm our commitment to making sure policies included in the final tax bill can be administered effectively for taxpayers, and that an appropriation is included to ensure our agency can carry out the tax law changes proposed. Your proposed changes on provisions such as the private letter ruling program, new entity level tax for pass-throughs, and administration of new tax credits would require extensive and labor-intensive work to be carried out accurately and effectively. We urge the committee to consider the impact on our customers and costs associated with these changes. And with that, thank you, Chair Nelson and members, for your time to testify on Senate File 961 as amended today. Thank you so much.
Commissioner Doty, thank you so much for your testimony. Next, we will go to Beth Kadoun from the Minnesota Chamber of Commerce. Welcome to the committee. Please state your name for the record and proceed with your testimony.
Thank you, Mr. Chair and members of the committee. My name is Beth Kadoun. I represent the Minnesota Chamber of Commerce. I first want to thank you for your approach in this tax bill to provide much needed tax relief and the focus on stabilizing at-risk businesses. These strategic actions will help in Minnesota's economic recovery as we come off the worst economic downturn in over 70 years. According to an April 15th report from DEED, the private sector has regained only 56% of the over 416,000 jobs that were lost from February through April 2020. So we still have a ways to go to get back to full strength. Policies that are enacted by state policymakers can greatly impact the pace of our recovery, and the growth and the vibrancy of our private sector will be a key element of that recovery. We agree with your do no harm approach, which is critically important so that additional tax burden and mandates are not placed on employers who are doing their best to keep their doors open and Minnesotans employed. On behalf of the United for Jobs Coalition, an organization of 90+ business associations and local chambers all across the state, thank you for your leadership and your inclusion again of full conformity with PPP loans. We believe it should be full conformity because we do not want to penalize those businesses that had more employers that had to take out bigger loans in order to retain those employees. We're also supportive of the following items that pass through entity election provision, which is a win-win. Thank you for Senator Rest and Senator Bach's leadership on that issue as well. Thank you for the property tax levy reduction by Chair Weber to continue the great progress made on a bipartisan basis to reduce this high fixed cost of doing business in Minnesota. We're also supportive of the private letter ruling provision that most other states have to help in taxpayer voluntary compliance. We also thank you for the inclusion of targeted relief to some of the hard-hit industries, the angel tax credit, the child care provider tax credit, the June accelerated tax provision, and Section 179 clarification. I would state as you get to tax conference committee, if there's opportunities that we think is a great use of some one-time funds is to provide some additional federal conformity, especially on some additional grants and loans that were provided to help mitigate the COVID-19 fallout. Thank you again, and we look forward to continue working with you to advance policies that will help speed Minnesota's economic recovery and best position our state for a prosperous future. Thank you.
Thank you for your testimony. Next, we have Paul Egger from Minnesota Realtors. Welcome to the committee. Please state your name for the record and proceed with your testimony.
Mr. Chair, members of the committee, my name is Paul Egger and I'm Vice President of Governmental Affairs for the Minnesota Realtors Association. We are a statewide business trade association with a membership of over 21,000 real estate professionals, working with buyers and sellers of all types of property in every corner of the state. Thank you for the opportunity to provide some brief testimony touching on a few items in the bill we support and one omission that we hope you will consider when you get to conference committee. In Article 1, the federal update article, thank you for including the provision that would allow pass-through businesses to elect to pay state income tax at the entity level, which will then allow them to take the full SALT deduction. Also, thank you for including the PPP loan forgiveness tax conformity. We have had members and local realtor associations share their concerns with us regarding the burden an unexpected tax bill would present if this provision is not enacted. In Article 2, the income and corporate franchise taxes article, we support the inclusion of the provision extending the sunset of the historic structure rehabilitation credit. And in Article 4, property tax aids and credits article, thank you for including Senator Weber's provisions reducing the state general levy for commercial industrial property and for seasonal recreational properties, and for increasing the market value exclusion on CI property subject to the state general tax. There is one item that is not in the bill, but which we hope will be when the bill returns from conference, and that's the federal conformity for the discharge of indebtedness on principal residences. The committee heard Senator Diedzik, Senate File 1775, earlier this session and had a good discussion about the importance of this issue. For federal taxes, this exclusion from income for mortgage debt forgiveness was extended for 5 years, which is through 2025. This exclusion would provide some relief to homeowners experiencing difficult economic circumstances by not taxing them on the phantom income from debt that has been forgiven, like what the PPP loan forgiveness provision does for businesses. And finally, Mr. Chair, we would like to request that when you are attempting to provide property tax relief for certain classes of property, such as 4D, that you minimize the shifting of the property tax burden onto other classes of property, particularly residential homesteads. And thank you again for the opportunity to testify today.
Thank you for your testimony. Next, we have Anna Odegaard, Minnesota Asset Building Coalition. Welcome to the committee. Please state your name for the record and proceed with your testimony.
Thank you, Mr. Chair and members of the committee. My name is Anna Odegaard, and I'm the director of the Minnesota Asset Building Coalition. Thank you so much for the opportunity to testify today on Senate File 961, the Senate tax bill. The Minnesota Asset Building Coalition is a coalition of nonprofit organizations across the state working to support asset building and asset preservation for low-income Minnesotans. As I'm sure every member of this committee recognizes, the past year has been particularly difficult for our communities. Many families lost jobs and income, ran through their savings, even saw a negative impact on their credit score as they fell behind on bills. I want to thank the committee for your work considering how Minnesota's tax system can best respond to the hardships families have faced in the last year. And I also want to ask for further consideration of some provisions that weren't included in this bill, but that would benefit low-income workers and families who may have the hardest time recovering from the economic impacts of the COVID-19 pandemic. PPP loans were critical for supporting small businesses and their workers during the COVID pandemic, and I appreciate the tax relief included in this bill for those who received them, as well as the tax relief for those who received unemployment benefits in the past year. However, as this bill heads to conference committee, I hope we can work towards a better balance of those relief measures with other tax relief measures specifically to low-income workers and families. In particular, I'd like to ask that you invest in an increase to the working family credit and a broader increase than is presently included to the renter's credit. We know that many families will struggle to recover from the economic impacts of the pandemic for months or even years. A boost to the working family credit for all eligible workers will support families' immediate needs, help them catch up on bills, minimize impact to credit scores that can impact economic opportunities in the future, and help families begin to rebuild their savings. Asset Building Coalition members work directly with thousands of clients across Minnesota who are struggling to get back on their feet. And so we see every day how critical and timely a working family credit increase is for the individuals and communities that we serve. The renter's credit is another tool in Minnesota's state tax toolbox that helps individuals and families stabilize and make up for shortfalls during the rest of the year. I want to thank the committee for including an increase to the renter's credit in this tax bill through the disregard for veterans' disability income. But a broader increase could make a big difference for more struggling renters. Lower income renters, including seniors, people with disabilities, and families with children, count on this credit to reduce the burden of high housing costs. As final negotiations on this bill proceed, I'd like to ask for an investment in a broader renters credit increase to help renters maintain housing stability during this recovery period. And last, I'd like to thank the committee for an important provision that is included in this bill, the increase to the income threshold for the K-12 education tax credit, which will increase the number of families who are eligible for that credit. The Asset Building Coalition first made the K-12 education credit an advocacy priority because one of the educational activities eligible for the credit is driver's education, which is an asset building opportunity many low-income families struggle to afford. Expanding access to the credit is even more urgent due to the COVID-19 crisis, which impacted the ability of many students, including my children, across the state to keep up with annual learning goals. This incredibly timely expansion can help families this summer afford tutoring or other educational support to make sure their children are ready for the next school year. We support this increase in the bill and hope there may be resources for an even greater expansion in the final tax bill to ensure that it's available to all the families who need it. Thank you so much for all your work on this bill and for the opportunity to testify today.
Thank you for your testimony. Next on the list that I have is Jill Larson. Welcome to the committee. Please state your name for the record and proceed with your testimony.
Thank you, Mr. Chair. I am Jill Larson with the Minnesota Business Partnership. I want to thank Chair Nelson and the committee for your work to craft an omnibus bill that we believe is focused on helping Minnesota families and businesses recover from the negative impacts of the COVID-19 pandemic. It'll accelerate Minnesota's economic recovery while also protecting Minnesota families and businesses from harmful and unnecessary tax increases. Specifically, we support the following provisions, and thank you for including them in the bill. Establishing the pass-through entity tax, allowing a pass-through business to elect to pay income tax at the entity level. This will help mitigate some of the negative effects of the federal, state, and local tax deduction cap. The PPP loan forgiveness federal conformity, although this provision doesn't really impact our members, we do support assisting those businesses, small businesses and industries that have been hit hard by the pandemic. The extension and funding of the Angel Tax Credit, the reduction in the state general levy. As you know, this is makes Minnesota quite an outlier in terms of property taxes. It can be anywhere from 25 to 30% of a business's tax bill. So we appreciate this reduction in the cost of doing business. We also support the partnership audit provisions, the private letter ruling. And Mr. Chair and members, in addition to supporting these provisions, we want to thank Chair Nelson for not including the significant, harmful, uncompetitive tax increases included in the governor's and House tax proposals, which would undermine Minnesota's tax competitiveness. This bill helps those businesses and individuals that are negatively impacted by the pandemic without harming other Minnesota businesses and families by increasing our already high tax burden. You will likely hear later that businesses and individuals need to pay more or pay their fair share. These businesses and individuals already are paying more. That's one of the reasons why we have a budget surplus. In a time when Minnesota businesses and individuals already pay some of the highest taxes in the country, the state has a budget surplus, and we will be receiving billions of dollars in new federal funds, we appreciate that this bill provides tax relief without increasing the cost of doing business in Minnesota. The bill will help employers recover from the pandemic, accelerate Minnesota's economic recovery, and help ensure that Minnesota is a place where people and businesses want to invest. Thank you.
Thank you for your testimony. Next on the list is Ann Mavety, Minnesota Housing Partnership. Welcome to the committee. Please state your name for the record and proceed with your testimony. We will move on to Emily Myatt from the American Cancer Society. Welcome to the committee. Please state your name for the record and proceed with your testimony.
Thank you, Mr. Chair and committee members. My name's Emily Myatt. I'm the Minnesota Government Relations Director for the American Cancer Society Cancer Action Network, the advocacy affiliate of the American Cancer Society. I'm here today representing Minnesotans for a Smoke-Free Generation, a coalition of more than 60 organizations committed to ending youth tobacco addiction. I want to share our support and thank Chair Nelson for including a new and necessary investment in tobacco prevention and treatment in this omnibus tax bill. This is an important step to reverse youth nicotine and tobacco epidemic and address tobacco-related health disparities. As you may remember, Clearway Minnesota, the organization that has provided the majority of our state's tobacco prevention efforts over the past 20 years, will sunset at the end of 2021. Unfortunately, commercial tobacco remains a threat. The legislature must act this session so we can continue our collective efforts to build a future free from tobacco addiction. Tobacco taxes and settlement fees are a significant source of revenue in Minnesota, yet only 1% of the funds are spent on tobacco prevention and treatment. The language in this bill dedicates funding from existing cigarette tax revenue to proven strategies to reduce youth tobacco use and help adults quit. Our collective work has saved thousands of lives, prevented thousands of cancers, and saved Minnesota more than $5 billion. And the legislature has been a strong bipartisan partner in these efforts. This session, a number of bills were introduced that provided the legislature with options to address this tobacco prevention funding gap. I want to thank all the members who signed on as authors or co-authors, including Senator Nelson, Miller, Dietzig, Rest, Chamberlain, and Klein. We look forward to working with you throughout the conference committee process. Sustainable funding for tobacco prevention will save money, improve health, and most importantly, save lives. Thank you.
Thank you so much for your testimony. Next on the list that I have is Dominic McQuarrie, the Wilder Foundation. Welcome to the committee. Please state your name for the record and proceed with your testimony.
Thanks, Chair and members. For the record, my name is Dominic McQuarrie. I work with the Amherst H. Wilder Foundation, a human service provider and research nonprofit in St. Paul, and a member of the Together We Rise campaign. So I thank you for the opportunity to provide some brief testimony on Senate File 961 and for all of the work that you've done in this session to put together this proposal. And I'd like to start with the thanks. We support the inclusion of the income tax subtraction for volunteer drivers. It's a small line item on there, but an important one for those of us who rely on volunteer drivers. And also, we are glad to see the inclusion of the housing tax credit, though I wish we could have a housing investment in this biennium, which leads me to my broader point about trade-offs. As you know, the tax committee in many ways is the most important committee we have in the legislature because it controls what is possible in every other committee. In a moment where we're exiting a pandemic with unequal and disproportionate health and economic impacts for low-income Minnesotans and Minnesotans of color, the zero target in housing and the negative target in health and human services can be tracked back to the decisions here not to raise revenues on those who have disproportionately come out of the pandemic stronger than ever. I'm well aware of the significant federal funds that still await allocation, but those are one-time and to be used as a springboard to supplement our state investments in our collective priorities rather than a replacement to supplant state funds. As we look towards the end of session, I ask that you look to ways that you can use your power over the tax code to acknowledge the needs and low-income communities coming out of the pandemic, similar to your thoughtful approach to the needs of the business owners. Raising progressive revenues so we can make ongoing investments in housing and childcare, or opportunities to invest in low-income communities through the tax code by expanding the working family credit and a renter's tax credit. The status quo was not good enough before, and coming out of COVID, it's essential that we invest in the recovery of all Minnesotans. Thank you for your time.
Thank you for your testimony. The next person on the list that I have is Skip, and I'll go Skip D. I will let you pronounce your last name. Please state your name for the record and proceed with your testimony.
Sure. Thank you, Mr. Chair and members of the Tax Committee for this opportunity today to speak to you. And also Senator Nelson for including the Affordable Housing Tax Credit in Senate File 961. My name is Skip DeShano. It's not an easy one, so I understand the difficulty there. I am the president of DW Jones Incorporated, a multifamily developer and property manager in Greater Minnesota, and testifying today in support of the housing tax credit. I live in Walker, Minnesota, a community with a population of 960 people. I work in communities north of St. Cloud and all the borders. We currently own housing projects in 32 different communities and manage in many more in northern Minnesota. We live rural, we work rural for rural Minnesotans. The Affordable Housing Tax Credit is an important resource to support housing needs for all Minnesotans, and especially those of us who live in Greater Minnesota. In the past 2 weeks alone, I've been contacted by communities such as the City of Warward, the City of Alexandria, the City of Sauk Center for housing needs. I often can't help them because there's just so limited resources. And with the COVID, it's even more difficult to make multifamily housing projects work at this time. The nice thing about the Affordable Housing Tax Credit is that it's very flexible. It'll work for single family housing. It'll work for multifamily housing. It'll work for affordable housing. It'll work for workforce housing. It's easy and straightforward. The beauty of it is $1 of credit will go to $1 of bricks and sticks into a project. There aren't many programs that you get a dollar for dollar contribution into actually creating what you want to do. It promotes private and public partnerships. This is a time to have a Minnesota Housing Tax Credit. I thank you for your time and hope you support the Affordable Housing Tax Credit. Thank you very much.
Thank you for your testimony. Next, we have Matt Norris. Welcome to the committee. Please state your name for the record and proceed with your testimony.
Thank you, Mr. Chair and members of the committee. My name is Matt Norris, and I'm the Policy Director and Director of Minnesota After School Advance at Youth Prize. I want to thank you for including updates to the K-12 education tax credit in your omnibus bill. Considering that the income limit for the maximum credit has not changed since 1997, we're thrilled to see the bipartisan consensus that has developed in the Senate around making updates to this important tool. And nearly 100 organizations from across the state have signed on to support this change as well. Adjusting the income limit and the credit amount for inflation is a good first step and one that we definitely welcome. However, after remaining unchanged for nearly a quarter century, there's still more catching up to do. While we know that the need is always greater than the available dollars in the omnibus bill, if there's ever an opportunity to further increase the income limit and bring it closer to the nearly $55,000 the income limit would be at if it had been indexed to inflation from the start, we would encourage the Senate to take it. In our work helping families from over 200 cities across the state use this tax credit, I continue to encounter families in need on a near daily basis who just don't meet the outdated income guidelines for this tax credit. I've often said that updating this income limit would be like flipping a switch. It would instantly make tens of thousands more Minnesota students eligible for assistance paying for academic enrichment programming like tutoring and educational computer hardware that's never been more important. These are dollars that would go to work instantly, making a difference in our state. One of the more modest changes that we also urge the Senate to consider in its omnibus bill is shifting from using the complex household income definition for this tax credit to simply adjusted gross income as proposed in Senator Eichhorn's Senate File 570. I've found that the household income definition is very confusing for families. It makes administration of the tax credit difficult, and this is the only remaining state tax credit to my knowledge that uses this definition. Lastly, I want to briefly call your attention to another important priority for Youth Prize that we ran out of time to have heard in the Senate this year, but is included in the House's omnibus tax bill. Youth Prize serves as a sponsor of the Federal Meals Program for local rec centers, libraries, nonprofits, and houses of worship that wish to serve meals and snacks during their out-of-school time programs. An unintended consequence of Minnesota's tax law is that nonprofits like us actually pay sales tax on this food. And last year, Youth Prize alone paid almost $250,000 in sales tax on these meals. While the cost of the meal itself is reimbursed by the federal government, we actually have to go out and fundraise separately to pay this sales tax. For that reason, we've proposed a narrow sales tax exemption for nonprofits that purchase prepared food for use in the federal meals program. In a time of heightened food insecurity, this would allow us to expand to more sites across greater Minnesota. This is one of those common sense solutions, and I urge you to adopt this provision from the House bill during conference committee. Thank you very much for the opportunity to provide this testimony.
Thank you for your testimony. And next, we're actually going to go back to Ann Mavety from Minnesota Housing Partnership. I believe she's back on. The committee, please state your name for the record and proceed with your testimony.
Thank you so much, committee members and chair. I'm Ann Mavety with the Minnesota Housing Partnership, and I'm here today to say thank you for including two tax proposals that MHP has been working on that really impact affordable housing needs in the state, and ask for your continuing support of these. The first one is the Minnesota Affordable Housing Tax Credit, and the second is the modernization of the 4D property tax classification. You know, the 4D tax classification hasn't seen updates in many years, even though financial pressures on affordable housing homes have continued to rise. And adjusting this 4D classification rate and supporting its modernization with guardrails to ensure that benefits are accruing to tenants who need it, it's a smart and effective way for the legislature to support the preservation of affordable rents, along with the ability of property owners to make updates and extend the life of rental properties. So we have heard from nonprofit and for-profit organizations that this 4D classification rate adjustment will make a real difference in keeping these rents low and affordable to households. And in addition to 4D, we're excited that the Affordable Housing Tax Credit is included in the Senate Tax Omnibus Bill, and I want to say a special thank you to Chair Nelson for that support. You know, MHP began work in support of this housing tax credit in response to feedback from community-based rural organizations who had provided input in support of a tax credit for housing that was flexible and simple and worked in rural areas. It's modeled on the successful North Dakota Housing Incentive Fund, which had produced 2,500 units in that state. And this affordable housing tax credit incentivizes private investment, and it promotes community and economic development. So, you know, I'll note that the Affordable Housing Tax Credit is a complement to 4D, as it supports housing needs in addition to those met by the 4D tax classification. And specifically, it supports new construction of workforce housing, preservation, and can be used for single-family or very small multifamily properties as well. So that flexibility and utility is why it's gained support and endorsement from rural and greater Minnesota banks, private developers, nonprofits, as well as Twin Cities-based community organizations and chambers of commerce. So thank you so much for the inclusion of that. We stand ready to continue to work with you to get that passed. Thank you.
Thank you for your testimony. Next, we'll go to Bradley Peterson. Welcome to the committee. Please state your name for the record and proceed with your testimony.
Thank you, Mr. Chair. My name is Bradley Peterson. I'm here today on behalf of the Coalition of Greater Minnesota Cities. Thank you for the opportunity to testify in support of a number of very positive items in this bill for cities. First, the sales tax exemption for materials and supplies used in construction of public safety facilities will allow cities to meet their public safety service obligations with less of an impact on property taxpayers. Next, I want to thank Senator Weber and Senator Nelson for the inclusion of authorization to create fire protection and medical services special taxing districts. This will provide more flexibility for communities as they seek to provide these services. We support the property tax credit for in-home childcare providers. Given the crisis in childcare, anything that we can do to support the childcare infrastructure in Greater Minnesota is helpful. We appreciate also the reduction of the CI state property tax burden on small businesses and the Main Street businesses that really are the backbone of many of our Greater Minnesota communities. Finally, in light of the uncertainty in local government budgets and in recognition of the efforts that cities took to mitigate the impacts of the pandemic, it is appropriate to have a one-year hold harmless so that no city receives less LGA in 2022 than they did in 2021. And it works for all cities because of the one-time appropriation so that it does not come at the expense of any other city on the LGA formula. Well, with that, Mr. Chair and Senator Nelson, thank you so much for the work of your committee and the work of the Property Tax Subcommittee. We appreciate all of it, and we look forward to working with you as this goes through the process. Thank you.
Thank you for your testimony. Next, we'll go to Patricia Nauman. Welcome to the committee. Please state your name for the record and proceed with your testimony.
Thank you very much, Mr. Chair and members. Just want to make sure you can hear me here. My name is, thank you, Patricia Nauman. I'm the Executive Director of Metro Cities, representing cities in the metropolitan area at the state legislature. I appreciate the opportunity to speak to you this morning, and I will be very brief. Just first of all, with respect to a few provisions in the bill, Metro Cities does support the supplemental local government aid provision in Senate File 961 that will help offset reductions. It will offset the reductions that some cities, including several cities in the metropolitan area, are seeing in their local government aid for 2022. This provision acknowledges the challenges that cities face with losses of aid. It also recognizes the need for additional review of the LGA program to ensure that it is stable and that it adequately addresses the needs of cities. And I know and appreciate that Chair Nelson has acknowledged this in previous committee hearings. Metro Cities does also support the housing tax credit contribution fund in the bill that other testifiers have spoke to, which does allow taxpayers to receive a contribution for contributing to a fund to support the development of affordable housing, which we all think recognizes a very big need for our local communities. With respect to the 4D expansion included in Senate File 961, and I know Metro Cities has testified on this previously, but we do continue to support a study of the impacts of an expansion prior to a change of this kind. This would be the lowest class rate on the state tax books. It's also a state program that is paid for by local property taxes. Those local property taxes are sort of on the radar of many right now because they are projected to see increased volatility in the coming years due to the pandemic and its effects. We believe that a thorough and granular analysis done broadly would allow policymakers at the state and local level to better understand the effects of this change on local taxpayers prior to enacting it. We do appreciate the local consent language in the bill that does allow, however, only allows newly enrolled 40 properties to be reviewed by cities. But we do remain concerned that the language on the 4D expansion continues to be silent on guardrails that would ensure the benefits of an expansion on renters. Metro Cities does recognize the language in Senate File 961, pardon me, that requires a report on affordable housing projects that are paid for with tax increment financing through a local housing trust fund. I just wish to express at this time, Mr. Chair and members, that Metro Cities does continue to support additional flexibility in the use of tax increment financing to support local housing needs. We look forward to continuing to work on those issues with the committee. Well, just a couple brief additional comments. While Metro Cities does not take positions on specific local bills, the association's policies do support generally the diversification of local revenue sources to help reduce the reliance on the property tax, and the authorization of the local sales taxes for individual cities in Senate File 961 does recognize, we believe, the need for this diversification as well as local project needs that will benefit not just a city's residents, but also non-residents. Metro Cities does support generally a streamlining of the construction sales tax exemption for local governments, and to this end does appreciate the exemption for public safety facilities in the bill. Finally, Mr. Chair and members, the amendment that did go on earlier that addresses the local excise taxes for specific purposes or would prohibit increases there. We are still reviewing that amendment, but I will just say that generally Metro Cities and has also expressed concern previously with bills of this nature and what they might do to impede local authority over a city's ability to impose those taxes. So I just want to express some concern with that provision. Thank you very much for your time today. We greatly appreciate the work of this committee and the chance to testify this morning, Mr. Chair and members, and I'd be happy to answer any questions.
Thank you. Thank you for your testimony. Next, we have Melissa Heising, Minnesota AFL-CIO. Welcome to the committee. Please state your name for the record and proceed with your testimony.
Thank you. Good morning, Mr. Chair and members. My name is Melissa Heising, and I'm Legislative Director for the Minnesota AFL-CIO, the statewide Federation of Labor Unions. We oppose Senate File 961 because it fails to raise revenue from those with the most resources to meet Minnesotans' needs. Essential workers and communities of color have borne the brunt of COVID-19, which exacerbated racial and economic disparities that existed before the pandemic. Meanwhile, Minnesota's state budget has been underfunded for over 20 years. Understaffed classrooms, crumbling infrastructure, and inaccessible healthcare can't be addressed with one-time money. Raising ongoing revenue would pay for provisions to meet the needs of working people that are missing from this and other Senate budget bills, including increasing and expanding the working family credit, a full subtraction for supplemental UI income, establishing a paid family and medical leave social insurance program, rebuilding small businesses damaged or destroyed by civil unrest, building, improving, and maintaining public infrastructure statewide, investments in affordable and emergency housing, hiring more OSHA staff to better enforce workplace safety laws, and implementing new paid leave laws, including Earned Sick and Safe Time and the Essential Workers Emergency Leave Act. Workers have suffered and sacrificed the most during this pandemic, while the wealthiest Minnesotans and big corporations have been doing just fine. Those who have prospered during these difficult times should do their part to help us not just recover, but rebuild, close racial and economic disparities, and pay more in taxes to fund Minnesotans' needs. Thank you for your time, Mr. Chair and members.
Thank you for your testimony. Next, we have Nan Madden from the Minnesota Council of Nonprofits. Welcome to the committee. Please state your name for the record and proceed with your testimony.
Thank you, Mr. Chair and members of the committee. My name is Nan Madden. I'm director of the Minnesota Budget Project. This session, we've called on policymakers to raise the revenues needed to fully respond to the pandemic and economic downturn so that all Minnesotans can be healthy, safe, and economically secure, and to build a more equitable recovery. Secondly, we've called on you all to prioritize revenue-raising options that focus on those with the most resources and make the tax system more fair and equitable. These are priorities that more than 100 organizations have signed on to through the Together We Rise campaign, and survey results show a majority of Minnesotans support calling on those with the most resources to contribute a bit more. We can't go back to a status quo budget that leaves too many of our neighbors unable to afford the basic necessities and keeps Minnesota's worst in the nation racial disparities in place. We must instead make strong structural investments in affordable housing, childcare, education, economic development, and other building blocks of a more equitable recovery. The improved state budget situation and federal dollars are an important part of that picture, but they are temporary. We need new revenues to maintain strategic investments after the influx of federal dollars has passed. Unfortunately, this bill goes in the other direction and reduces revenues both in the near term and the tails. It's also extremely disappointing that this bill does not include any expansion of the working family credit. I urge you to consider strong expansions of working family credit and the renter's credit to support the economic well-being of lower income Minnesotans and Minnesotans of color. These are the essential workers who have risked their health continuing to work on the front lines and were most likely to lose jobs during this pandemic. Just two provisions focused on businesses, the PPP conformity and cutting the statewide property tax, take up the vast majority of the resources in this bill. We urge you to find a greater balance and make everyday Minnesotans a higher priority in the tax legislation that you will pass this year. Thank you.
Thank you for your testimony. Next, we have John Thorson from Leona. Welcome to the committee. Please state your name for the record and proceed with your testimony.
Thank you, Mr. Chair, Chair Nelson, members of the committee. My name is John Thorson with LiUNA, Minnesota, North Dakota. We're Minnesota's infrastructure union representing more than 12,000 skilled construction laborers who build, maintain, and operate the critical infrastructure necessary for Minnesota's economic prosperity. The COVID pandemic triggered an unusually sudden, historically deep, and as we now see, the most uneven economic downturn in our modern history. It's resulted in large setbacks for workers and businesses in the construction industry and has hit communities of color and people throughout greater Minnesota especially hard. Recovery from this economic hardship of this scale and severity requires additional revenue to jumpstart our economy, get thousands of people back to work, and prepare our state for a better and stronger future. I first want to thank Chair Nelson and the committee for excluding a portion of the unemployment insurance that was received by over 500,000 Minnesotans displaced by the pandemic. It's our sincere hope, however, that the House provision that subtracts the full $10,200 of additional unemployment insurance that was received will prevail in conference committee. I also want to thank Chair Miller and Chairs Miller and Nelson for extending the historic preservation tax credit. But to echo Senator Rest, our concern lies more with what's not in the bill, and that's mainly long-term, ongoing, and sustainable revenue to support our economy. We support the new revenue proposed by both the governor and the House, which asks large corporations and Minnesota's wealthiest families to contribute their fair share for supporting a better, stronger future for everybody. It's the revenue that's necessary for fixing our roads, our bridges, water infrastructure that's suffering from decades of underinvestment, and also to rebuild the businesses and neighborhoods in Minneapolis and St. Paul, which saw decades of small business and community investments destroyed last year in just a single week of unrest. These are all critical investments that require new revenue. Mr. Chair, Chair Nelson, members, thank you, and we look forward to working with you to build a stronger, more equitable recovery for Minnesota's students, small businesses, workers, and families.
Thank you for your testimony. Next, we have Chris Conry. Welcome to the committee. Please state your name for the record and proceed with your testimony.
Chair Miller, Chair Nelson, and members of the committee, my name is Chris Conry.
I'm the director of the 100% campaign. We're a coalition of over 50 organizations advocating for equitable climate solutions in Minnesota. I will keep my comments brief. We'd like to urge caution. We should not overestimate the strength of the state's fiscal position. According to our February forecast, we have only a $260 million structural balance. Much of the remaining surplus is one-time, inflated by certain pandemic-caused spending decreases and one-time federal COVID relief payments. The bill's cost in fiscal years 24 and 25 is $180 million. This cost will shrink our options significantly in future years. For example, in the area that I work in, the general fund supplements dedicated sources such as the Renewable Development Account, the Environment and Natural Resources Trust Fund, and legacy funds. It's used, for example, to supplement bonding, to fund clean energy investments in Greater Minnesota, to fund scientific research at our public universities, for county-level crisis preparedness, and for our state disaster assistance contingency account. In particular, we have a concern about one particular item exempted from our 0.3% legacy sales tax. The retroactive support for restaurants' PPE expenses is a reasonable one-time expense. However, the committee should use one-time general fund dollars to pay for them rather than drawing on ongoing dedicated legacy funds. Finally, we're disappointed that the committee did not take this opportunity to make our tax code more fair by increasing progressive revenues or lowering taxes for working Minnesotans via the Working Family Credit. Thank you for your time today.
Thank you for your testimony. And next, we have Eric Harris Bernstein. Welcome to the committee. Please state your name for the record and proceed with your testimony.
Chair Miller, Chair Nelson, members of the committee, my name is Eric Bernstein, and I am the policy director at We Make Minnesota, which is a pro-revenue coalition of labor and community groups from across the state. I'm here today to share my concerns about Senate File 961, the omnibus tax bill. The bill before us would leave the state unable to fund many of our pressing needs. Among these, an annual infrastructure funding gap of at least $900 million and a shortage of 6,000 school nurses and counselors. This bill not only fails to support many such priorities, but as Mr. Connery just shared, it poses a serious threat to Minnesota's budgetary stability. MMB currently forecasts a 2022-23 structural surplus of just $260 million. This is equivalent to less than 0.5% of current law spending in the coming biennium. SF 961 would drive that thin margin into negative territory, flipping it to a structural deficit of $300 million. Factoring in inflation, SF 961 would leave Minnesotans with an effective shortfall of $1.34 billion in 22-23 and over $2 billion in 24-25. By failing to provide adequate price adjustments, SF 961 would leave Minnesotans to contend with on-the-ground funding challenges and will necessitate a larger tax increase later. Worse, all of this rests on the highly optimistic growth projections underlying the February forecast. These projections assume not only a 2021 GDP growth rate of 5.7%, which the United States has not seen since 1984, but also a 2022 growth rate of 4.1%, which we have not seen since the year 2000. Don't bet on it. Even under the best conditions, SF 961 will place Minnesota in a difficult position. Under anything but the best conditions, it could prove disastrous. And with all that downside risk, Minnesota will get precious little in return. A backwards-looking tax cut on corporate profits is a very poor reason to go into debt. Unlike investments in education and infrastructure, the preponderance of evidence shows that tax cuts do not yield additional growth. I understand this committee keeps the interests of the business community close to its heart, but lower taxes are not the only thing that matters to businesses. Instability is bad for everyone. Budget cuts are bad for everyone. This bill is fiscally irresponsible and should be reconsidered. Thank you very much.
Thank you for your testimony. That completes the list of testifiers that I have in front of me. Is there anyone else who would like to testify on Senate File 961 as amended? Members, are there any final questions before Senator Nelson makes her motion? Senator Dziedzic.
Thank you, Mr. President. I just want to thank staff, Brian Steinhoff and Madeline Hoy. You know, these Zoom hearings have been quite an adventure, but with their help, it worked. I want to thank nonpartisan staff and partisan staff for their help and work. I actually think there's a lot in this bill that I support, like the PPP loan exclusion, help for restaurants, I have some concerns on the childcare, but I understand that the need out there is great, and so I appreciate the creativity. Senator Rest, K-12 credit modifications, I think are a good inclusion. And then I support the historic preservation tax credits and the different options for housing funds. And then I really appreciate the money for the tobacco prevention and cessation, because I think we need to keep that going since Clearway is sunsetting. I would have liked to see more relief for those who receive the pandemic unemployment insurance. You know, businesses get full PPP relief in this bill. And so I think that those individuals, some of whom are small business and sole providers who didn't have established banking relationships, so they were not able to get PPP, should also get a full relief on the $10,200 from the pandemic insurance. You know, this bill allows businesses to make elections so they get the best benefit. And I would hope going forward, we could, you know, consider allowing those who get working family credit a similar type of election for tax year 2020. And then as Mr. Egger from the Realtors said, I think we should help those who lost their homes recently and conform to the mortgage foreclosure indebtedness provisions. I think this is a good start, and I look forward to working with the chair and others to improve the bill as we move forward. But at this time, unfortunately, I'll be voting no.
Further discussion on the bill, Senator Klein.
Thank you, Mr. Chair. And like Senator Dietzick, I'd like to thank Senator Nelson and other members of the committee for, in a very nonpartisan way, sort of initiating me into a difficult subject as a new member on the tax committee this session. Thank you to staff for your very patient tutorials and to all the advocates for the wise testimony. I am going to vote yes on the bill for passage today to demonstrate bipartisan support for PPP conformity and unemployment tax relief. I think those are important measures that everyone in the legislature supports. Like Senator Dietzick, I support the funding for historic preservation and the tobacco prevention funding. Thank you much for including those. And from the Property Tax Committee, on which I was honored to serve with Senator Weber, grateful for the expansion of exclusion to $150,000 on primary residences. Unfortunately, this bill could be much better. It does provide needed relief for small businesses and for our Main Street. But if you are a working Minnesotan who did not receive unemployment insurance last year, this bill does not address you. I'd like to see going forward an expansion of the first tier for tax relief for low-income Minnesotans, an addition of a fifth tier tax rate for those who did very well during the last year, and to expand our efforts to fund essential projects in our state. I would also like to see full conformity on discharge of indebtedness to primary residences for folks who had to go through foreclosure in the last year and now owe a tax burden on their losses. And expansion, of course, of the renter's credit and the working family credit. Lastly, Senator Nelson, Chair Nelson, I'm hopeful that we can include Senator Ress's longstanding provision for free filing. There's never been a season where that would be more necessary for low-income Minnesotans who have to pay an extra fee to file their taxes. So thank you very much for the bill.
Further discussion on the bill, Senator Bach.
Well, Mr. Chairman, I'm concerned about the 4D provisions in here and the amount of shifting that's going to happen on other property. You know, we're basically saying these 4D apartments they're not going to pay much in property taxes. And there's a larger discussion to have. You know, when we did the federal tax conformity, and almost very few taxpayers itemize any longer. So taxpayers really aren't getting the benefit of deducting their property taxes on their income tax form any longer. It's all built into everybody's standard deduction. I raise that because that's the reason that I remember that the renter's credit was put in place, to make sure that renters could get the same kind of a benefit in a renter's credit that a homeowner can get by itemizing and deducting their property taxes from their income. So I do think the renter's credit, and this is a conversation for another day, probably needs to be revisited, especially when you look at 4D. If it really is intended to mimic what homeowners receive in property tax relief, when the apartment owner doesn't pay or pays very, very little property taxes, then the intent of the renter's credit really isn't a renter's credit to reimburse for property taxes any longer. It's something else, and it can be something else, that's fine, but we probably need to look at the aids and credits and look at the purpose of the renter's credit and revisit it considering all the tax changes that we've made. And maybe it needs a different purpose than it has under current law, but I don't think it meets with the purpose because of the federal tax conformity, and especially if we go this direction on 4D. Just a conversation, I think, for all the committee members to think about going forward. But I mean, I'll say it again, I'm concerned about shifting something in the neighborhood of $50 million of tax burden to other properties to benefit just the 4Ds. That's it, Mr. Chairman.
Senator Weber.
Thank you, Mr. Chair. I do want to comment that I do believe there is a broader discussion going on as relates to the 4D item. And I think it's important for us to let those parties negotiate some things and work on that element. And then finally, I was a bad property tax chair in light of the fact that I forgot to thank my property tax committee members, Senator Klein, who served as the lead, as well as Senators Chamberlain, Jasinski, and Murphy, who served on the committee. And I just want to take this opportunity to thank them as well as all of our staff. Thank you.
All right, Senator Nelson.
Well, thank you, Mr. Chair. Members, I thank you for your support and work. This bill does deliver tax relief and reform. It does prioritize our response to COVID, and it targets those other critical needs like have been mentioned. And I want to just thank the members. We know that bills go to committee to be refined. That is the strength and the beauty of the committee process. And every one of you have so thoughtfully been involved in refining these bills that have come before us. And I just salute you. I thank you. I know it's been really hard. It's been really hard to do all this during Zoom. And as a new committee chair, leaving education and coming to the tax committee, I'm sad that we've not all been able to meet together in the same place at the same time, like in G15. I know we'll be able to do that soon, hopefully next year. But I just thank each of you for your dedication and thoughtful improvement as we've moved forward. Your fingerprints have been on these bills, making them better. And we did thank the staff earlier. And as you know, none of this would be possible without all of that good, hard work with our council and our fiscal analysis, our fiscal analysts. And so I just thank you for that. Now, we know that this bill, just like committee process, bills get better in committee process. We believe bills get better in a conference committee too. And I look forward to moving this bill forward into conference committee. Again, I just thank members. I thank you for your awesome support. And Mr. Chair, I would like to renew my motion and move Senate File 961 as amended to the Senate floor with recommendation to pass, and of course, direct staff to make any necessary technical changes. With that, members, I'd renew that motion.
Okay, members, Senator, discussion on the Nelson motion. Seeing none, all those in favor say aye.
Aye.
Aye. Opposed, say no.
No.
The motion prevails and the bill passes. Senator Nelson, any closing comments?
Thank you so much. We are adjourned. Have a great weekend. Look forward to working with you all in the future as we move forward. Meeting's adjourned.